Something strange is happening with NVIDIA. The company is generating a massive 101% return on equity, a level that most companies can only dream of. Yet some valuation models are giving the stocks an F rating. So the real question is simple. Is NVIDIA still one of the greatest investments of the decades? Or is the market getting dangerously optimistic? Today we break it down using the numbers institutional actually watch. Let's talk about the first metrics, the return on equity. The return on equity actually measures how efficiently a company generates profits from shareholders' capitals. When we look at the NVIDIA era here, from 2012 to 2026, we can clearly see a big evolution, going from almost 10 to now plus 100%. To put that into perspectives, most strong companies operate between 50% and 25% ROE. So NVIDIA is producing a return 4 to 5 times higher than a typical high company. That level of probability is extremely rare. But here is where things get interesting. Some valuation models, particularly those focusing on price multiples, are actually labeling NVIDIA's valuation as overextended. Over the past few years, NVIDIA's revenue has exploded. Data centers demand for AI chip has surged, especially after the year 2022. Look at the evolution of NVIDIA. It has become one of the fastest growing large companies in the world. And this momentum has helped push the company market value into the same league as the world's largest tech firm. But rapid growth often leads to a very high expectation. And expectations are what drives stocks' volatility. Now, let's look at the price chart. Notice how the stock has been climbing inside a strong long-term uptrend, very beautiful uptrend. If you want to draw a certain line here, you can actually have this one, very beautiful. And the momentum has been powerful, but periods of consolidation are actually starting to appear. Let me zoom on the weekly time frame so we can see clearly what I'm talking about. This level here. And this level tells us two things. The first, institutional investors are still supporting the trend. This is very important because we can clearly see that the trend is actually dancing around the 50 moving average here, not trying to break down, not trying to break higher or also. Second thing, the market may be entering a phase where valuation and growth need to reconnect. So stocks that rise this quickly often pause as the market reassess the fundamentals. So investors, trade safe, be careful and watch clearly what's going on here if you want to enter the market. Because this is actually where you guys, professional investors, start asking tougher questions. Is AI demand sustainable? Will competitors eventually reduce NVIDIA's dominance? Companies like Advanced Micro Devices and Intel are investing heavily in competing AI chips. We call it the AI war. But based on this scenario alone, this scenario of consolidation, we have two things. First, the opportunity, because this level is actually telling us that we can actually enter the market right now because AI is still accelerating, the cloud infrastructure spending continues to rise, and NVIDIA remains the dominant supplier of AI hardware. But here's the risk. Here's where the devil is, because nobody wants to see someone just continue to have money for a long time indefinitely. That's why bigger other companies are actually starting to compete. I'm talking about Intel, I'm talking about AMD, I'm talking about other companies that are actually trying to build chips. Everyone wants to eat the part of the cake. So based on that, we can actually see that the demands on AI of NVIDIA will start to reduce based on competition alone. So this price here will decide whether it will continue to go higher or come down lower. But remember, coming down lower doesn't actually mean crash. It means repositioning, rotation for a better price for explosion. So investors, we still have a major level here. Remember, I talk about it like a doji on the monthly, which is actually very important because it creates a big boom while touching the 100 moving average on the daily. So the price could come back here with a big justification as it collects all the liquidity laying down here. As we have a big liquidity pool, hitting this 100 moving average, continue to go higher. But NVIDIA represents one of the most extraordinary success story in modern technology still. But in financial markets, even great companies must eventually justify their valuation. Eventually. So the coming years will determine whether NVIDIA's growth continues to exceed expectation or whether the market has already priced in too much optimisms. Investors, if you enjoy data-driven market analysis like this, subscribe for weekly breakdowns on major companies, AI trends, and market movements. Thank you for watching and have a nice day.